Trading Forex can feel like trying to tame a wild beast. One minute, you're riding high on the thrill of a winning trade, and the next, you're scratching your head, wondering what just happened. Trust me, I've been there, and I know exactly why so many people find Forex trading to be incredibly difficult. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. First off, let's talk about market volatility. The Forex market is like the ocean. Calm one moment, and then out of nowhere, a massive wave crashes down. Prices can change in the blink of an eye, and unless you've got a crystal ball, which, sadly, none of us do, it's tough to predict where things are headed. This constant roller coaster can be exhilarating, but it's also nerve-wracking when you're trying to make the right call. Then there's leverage, the double-edged sword of Forex trading. It's tempting to dive in, control a large position with a small amount of capital, and dream of massive profits. But here's the catch. Leverage can just as easily amplify your losses. It's like playing with fire, exciting, but dangerous if you're not careful. Managing this risk is crucial, but even seasoned traders can find it challenging to get the balance right. Now, if you've ever tried to analyze a Forex chart, you know how complex it can be. There's a lot to take in. Candlesticks, moving averages, Fibonacci retracements. The list goes on. And that's just the technical side. Throw in the need to stay on top of global economic news, and suddenly you're juggling more than you ever thought possible. It's no wonder many traders feel overwhelmed. But perhaps the toughest part of Forex trading isn't even the market itself. It's the battle going on inside your head. Emotions like fear and greed can easily cloud your judgment. You might hold on to a losing trade for too long, hoping it will turn around, or panic sell a winning trade too soon. Maintaining emotional discipline is easier said than done, and it's something that trips up even the most experienced traders. And let's not forget the competition. The Forex market is one of the most liquid and competitive markets out there. You're not just up against other retail traders, you're also competing with big institutions like banks and hedge funds. These players have deep pockets and years of experience, making it tough for the average trader to keep up. There's also a steep learning curve to consider. It's easy to underestimate just how much time and effort it takes to develop a profitable trading strategy. Many traders experience significant losses before they finally start to see consistent gains. It's a humbling experience, to say the least. Another challenge is the potential for market manipulation. Although the Forex market is decentralized, it's not immune to sudden, unexpected price movements, especially when large institutions get involved. These whales can move the market in ways that catch smaller traders off guard, leaving you wondering what just hit you. Overtrading is another trap that's all too easy to fall into. The Forex market is open 24 hours a day, which is both a blessing and a curse. The constant availability can tempt you to trade more than you should, leading to fatigue and costly mistakes. Sometimes, the best trade is no trade at all, but it takes discipline to step back and wait for the right opportunity. And let's not forget about the external factors, economic and political events that can send currency prices soaring or crashing. Interest rates, inflation, political stability, all of these play a role in the Forex market. Keeping up with global news and understanding its impact on currency prices requires a broad knowledge base and a keen eye for detail. Lastly, the Forex industry is rife with scams and misinformation. Whether it's a shady broker, a dodgy signal provider, or a too-good-to-be-true get-rich-quick scheme, there are plenty of pitfalls to avoid. Navigating this minefield and finding reliable information can be a challenge, especially for beginners. So, why is trading Forex so difficult? It's a combination of market complexity, psychological challenges, and the need for continuous learning. But don't let that discourage you. With the right education, discipline, and a healthy respect for risk, it's possible to overcome these hurdles and become a successful trader. Just remember, it's a marathon, not a sprint, and every trader's journey is unique.